Okay, cool. Let's get started. Okay, so first of all, welcome everybody to this banking sector Singapore edition, whereby we actually talk about Singapore stocks. You know, I know many of you guys actually come from Telegram, so you have been receiving a lot of information. And actually, why I started this banking sector is because you guys actually shared that, you know, you'll be more interested in the banking sector. So we start with this first. Subsequently, you know, I know some of you guys are also interested in REITs, like a Maple Tree, Capital Mall, Ascender Street, you know. Probably we might look at the next bonus session whereby we actually talk more about REITs. You know, no promise, but yeah, we see what we can do. Anyway, I'm stuck at home, so yeah, if you guys actually want more content, more bonus session like this, okay, just put in more more into the chat group. All right, if I see enough more, probably I will look into generating more bonus session like this. Oh, fantastic. Cannot hear. If you can't hear me, okay, maybe you can just rejoin. All right, for those who can't hear me, just rejoin. More for Key and Friend. Oh, good to see you, Key. All right, fantastic. I'm sure you guys actually want more, and actually I'm here to also deliver as much value as possible to you guys as well. So let's get started. So, okay, so first of all, today, the main topic is about our three local banks, namely UOB, DBS, as well as OCBC. All right, so what happened is that I actually throw in a bonus. Okay, on top of the three local bank, I actually going to throw in a additional bonus US bank, which is this company called JP Morgan. All right, so the reason for me throwing in one more bank is to show you guys a contrast between local bank, and we also want to look at how overseas bank, you know, has been performing. I mean, we are all familiar with JP Morgan. They are also in Singapore as well. So we'll just see how they actually operate, and is there any big difference? All right. And so a lot of people ask me, so why actually talk about banks? Okay, I think first of all, I think you guys are actually interested in banks. Okay, but I think very important is that banks are something, companies that we are all familiar with. Okay, I'm pretty sure, okay, 101% that all of us here have a bank account. Okay, I'm pretty sure all of us here have a bank account. 99.9% it is either UOB, DBS, or OCBC. 99.9 lah. Maybe you're from overseas, so probably you're using an overseas, but 99.9% you'll be using either one of these three banks. So again, why banks is because bank has a strong government backing. Okay, bank has a strong government backing. When I say that, okay, it is not because banks, they are literally like too big to fail. Okay, but because banks, they are considered what we call essential services. Can you imagine if today, okay, touch wood, let's say OCBC collapse? What is going to happen to all the people who actually have their money inside OCBC? And what happened to all the transaction that is ongoing inside OCBC? All your mortgages, all your loans, all your insurance, all your savings, all your fixed deposit. You know, there's so much things that the government actually have to do because of the collapse of one of the big major bank in Singapore. So I'll say that, okay, it is such an essential services that if, let's say, touch wood, something were to happen, the government will probably come in, you know, and actually support the bank. Touch wood, should anything were to happen. All right, so I think very important also, we want to ask ourselves today when we invest in this company, okay, will the company be there 10 years later? So I just want to pose this question to you guys. Do you think that the three local banks will still be here? Okay, will still be there, okay, 10 years later? If you believe it will be there, type in yes. If you think that it won't be here, then just put no. All right, hopefully we will see all yes. Hopefully there will be a merger. Okay, so OCBC, DBS, and UOB merger. I don't know what is it going to be called. All right, good. I'm pretty sure that you guys are all very optimistic. So what happens if they merge? What happens if they merge? Actually, nothing changed. Probably they will put a logo. They will change the logo. As you can see, JP Morgan, right? Actually, right now the full name is called JP Morgan Chase. So JP Morgan Chase basically is a combination of JP Morgan plus Chase, which is another bank. Yeah, so they just put everything together. But basically, things still go on. In fact, they might even keep all the branches open as per normal. So if you are, so let's say DBS and OCBC were to merge, so you can go to any one of them. It's literally the same. All right, so you get bigger banks. Yeah, very, very, very true. Okay, so very important are why banks, because banks are something we are familiar, strong government backing, and I think 10 years later, the banks will still be there. All right, so we have a 3-step process for us to actually analyze bank and also to see which are the banks that we want to enter. So these are the 3 main things that we are going to focus on today. So number 1 is the fundamental of the banks. Okay, fundamental. How good is the banks in terms of the financial? Next is the valuation. Today, are we buying them at a sensible price? All right, and of course, moving on to the last one, what is the trend? Okay, we can see that right now, most of the banks have fallen about 20-30%. All right, so is it the right trend to actually go in? So we actually focus on these 3 areas: fundamental, valuation, and the right trend. So comparison table. So like I said, I'm going to compare these 4 companies as well in terms of these 3 different criteria. So let's start with the first one, which is our step number 1, business fundamental. So I have a term to help you to remember, which is the triple E. Okay, triple E. So the first things that we want to look at is earnings. Okay, the first thing is earning. The second one is efficiency in terms of the operation. In terms of the operation, how efficient are they? And the second and the third efficiency is about the management. How efficient is the management? So basically just 3E: earnings, efficient, operations, efficiency on the management. All right, so very easy to remember. So let's start with the first one. All right, so today when we invest in a bank, okay, I think we want to make sure that the bank is also profitable. The bank is making money. All right, so we can look at the net income. So the net income must be positive. So when the net income is positive, it tells you that the bank is profitable. And the next thing we want to look at is the profits consistent? That means, is the bank making money consistently? I think that is also very, very important. So why is consistency important? I just want to ask you, think of the profits as your salary, as your monthly salary. Do you want your salary to be stable and growing, or do you want to have an unstable salary? All right, so which one do you want? Stable and growing or unstable? Put into the chat group. So if you want a stable and growing salary, just put stable and growing. If you don't mind an unstable salary, you can also put unstable. Yeah. Okay, so far everybody is putting stable and growing. Fantastic. I just want to make sure that you guys are still all right, because it's day 2 of the circuit breaker. So maybe by the end of these 30 days, you guys would probably choose unstable. So hopefully not. So right now, you guys are still okay. Fantastic. So make sure that this bank is profitable and the profits are consistent. The best is, of course, they are stable and they are growing. That would be the best. So if you look at DBS, okay, that is where we look from the left to the right. You can see that it's 2010, 2011, 2012, all the way to 2019. All right. Then we focus on this net income. So we want to make sure that this number is positive. And from the left to the right, the best if it is growing. So based on what you see, do you think DBS income is good or bad? All right. Do you think DBS income is good or bad in terms of the earnings? If it's good, just type good. If it's bad, just type bad. All right. I think it is quite straightforward. We can see from 2010 is about 1,860 million all the way to 2019, 2020. Right now, it's about 6,000 million. Okay, so not only is it all positive, you can see that there's consistent growth for DBS Group as well. So it's fantastic. So for that, we are going to give it a tick, which is good. And now I'll move on to OCBC. So same thing for OCBC. We look from the left to the right. Okay, we can see from 2,000 over million all the way to 4,000 over million. So same thing, fantastic. Everything is positive. The company is making more and more money. The earnings are growing. So again, another tick for OCBC. Now moving on to the third one, which is UOB. So we can see that UOB, same thing, from 2,600 million in 2010 all the way to right now is about 4,000 over million. So you can see that the company is also growing, the company is profitable. All right, so I think for that we will also give it a pass. So all three company in terms of the earnings, they actually passes. So that is for our local bank. So right now we want to focus on the one overseas bank, which is JP Morgan. Okay, so let's take a look at JP Morgan. So we can see that for JP Morgan, okay, their net income is started from about 17,000 million, which is a huge number. Okay, but even though it is a huge number, you can see that from 2010 all the way to 2019 and up till today, it has also doubled. Okay, it has also doubled to about 36,000 million. Okay, that is 36,000 million. So that is incredible. Same thing for JP Morgan. It is a pass as well. So JP Morgan, fantastic company, fantastic bank, earnings good. So now moving on to the second one, which is efficiency. We want to look at the operations. So what do I mean by operation? Let's take a look at this thing called the loan to deposit ratio. Okay, the loan to deposit ratio. So how does the bank makes money? Very simple. They basically take all your money, whatever money that we put in as deposit, they actually loan it to somebody else and they collect interest from there. All right, so the bank actually pay us interest. Right now it's probably about 0.05%. If you have, you know, like 360 account or some special account, it's about 1 to 2%. But the loans that they are giving out, so they take your money, they loan to somebody else. How much are they collecting in terms of the interest? Easily more than 2%. In fact, it could be 3%, 4%. Sometimes if you delay your credit card, you know, it can even go up to like 14%, 16%. So that's basically how banks make money. All right. So loan to deposit ratio is important, okay, because there's a requirement that the bank is not allowed to actually loan out everything. They need to have some buffer. So what happens is that over here, I actually put in the optimal percentage. Okay, so the optimal percentage for banks is actually 80 to 90%. Okay, 80 to 90%. So over here, you can see on the blue color, if the bank loan to deposit ratio is less than 80%, okay, less than 80%, that means the banks are not maximizing the capital. So let's say they collected 100 million. Okay, they are only lending out 60 million. So that is a loan to deposit ratio of 60%. Okay, so out of 100 million, they're only lending out 60 million. That is 60%. So that is not maximizing the capital. But again, if let's say out of 100 million, they are lending out almost like 100 million. So almost 100%. You can see that the bank might face liquidity problem, especially during a downturn. So in current market situation, right now, we want to, as much as we want a company to be profitable, to make more money, but at the same time, we want to be careful. So we might want to avoid banks that is having a loan to deposit ratio that is above 90%. All right. So if we look at the three local banks, you can see that they are very, very healthy within the range of 80 to 90%. All right, pretty close. The one that has the highest loan to deposit ratio is DBS. And we can see that for US, the percentage is actually lower at 61%. All right, because I think that partly because Singapore, we can't dominate. The whole market is dominated by these three banks. So they actually have a very, very strong and healthy loan to deposit ratio, okay, between 80 to 90%. So if you ask me, I would say that all three local banks have a pass. All right, all three local banks have a pass. So up till now, we can see that our local banks, in terms of the earnings, fantastic. In terms of the efficiency of the operations, again, is amazing. So now moving on to the third one, which is the efficiency of the management. Okay, efficiency of the management. So that is where we want to look at this thing called return on equity. Okay, so what exactly is return on equity? So ROE is actually how effective a bank management is in maximizing our profits from shareholders' capital. All right. So in simple terms, okay, in simple terms, for example, today I give you $10 million to start a shop, and using that 10 million, you are able to help me to make 1 million. So that will give you a return on equity of 10%. That means based on the capital that I actually given you, which is 10 million, you are able to generate me a profit of 1 million every single year. So that will give you a return on equity of 10%. So of course, the higher the better, because if I give you 10 million and you're able to generate 5 million every single year for me, that is a return on equity of 50%. Okay, 50%. So again, this number, the higher the better, but we have to be realistic. Okay, so what is a good number? ROE above 10% for most of the years is good enough. All right, for banks, I actually reduced this slightly. Okay, for normal companies, usually the ROE that I'm looking at is 15%, 1.5. You know, but I realized actually for banks is a lot more challenging. Okay, and so a double-digit ROE above 10% is actually considered quite healthy. So if you look at DBS, okay, from 2010 all the way to the TTM, okay, which stands for trailing 12 month, which is right now. So y'all tell me, do you think this is a pass or fail? Do you think most of the years are above 10%? If you think it's a pass, just put pass. If you think it's a fail, just put fail. Just put into the chat group. Okay, so I have 1 pass, 2 pass, 3 pass, 4 pass. Okay, once I have 10 pass, I will go on. So 5, 6, 7, 8, 9, 9. Okay, 10. Okay, fantastic. So everybody pass. Okay, so now we can move on. So next, again, you guys will tell me OCBC from 2010 all the way to TTM. Is it a pass or a fail? Okay, once again, I'll see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Wow, that's really fast. I think you guys love OCBC more than DBS. All right, and moving on to the last one. So same thing, OCBC is a pass. And the last one is UOB. So UOB, again, from the left to the right, is it a pass or a fail? Pass or fail? Pass, pass, pass. Okay, so far everything is pass. Pashk. Oh Ching Kok. Hey, Oh Ching Kok. What is a pashk? Okay, pass, pass. All right, fantastic. I think you guys got the concept very well. Okay, good. So we can see again, once again, our local bank passes this criteria. All right. So from the start, from the profitability to the operations to the management, you know, our local banks have scored full mark. Okay, our local banks have scored full mark. So now let's take a look at our good friend from United States, JP Morgan. JP Morgan. Okay, so based on this figure, JP Morgan, let me know whether is it a pass or a fail. I hope you guys have no special judgment because of Donald Trump. Let's just look at the figure. Okay, pass, pass, pass. Okay, yeah, pass. All right, but we can see that for US bank, the fluctuation is slightly more volatile, slightly more volatile. Singapore banks tends to be more steady, you know, very stable around there. Yeah. So there's actually one thing that I like about Singapore stocks. You buy and you forget, and you know, 5 years later, you take a look at your brokerage account, you will not have a heart attack because it is about the same. Yeah, it could be a good thing, could be a bad thing, as long as every year you collect the dividend. All right. So JP Morgan, once again, I think you guys have released the answer. It is a pass. So amazing company as well, JP Morgan. Okay, so right now, I think in terms of the fundamental, we have actually run through the 3, which is again, just a refresher, profitability, the operations efficiency, as well as the management efficiency. All right. So now I just want to share with you a case study using DBS as an example, just to elaborate a little bit more, because one of the questions that I always get is that, Borwen, I think in terms of the bank in Singapore is saturated. I mean, there's only these 3 banks. So how does the bank actually grow their profit? We other than you know, the government asking the Singapore population to increase the population so more people have more money so that they can put more money in the bank. Other than that, how is the bank going to increase their profitability? All right, so I just have this very, very quick case study on DBS to share with you guys how DBS actually increases their profit, over the last 10 years. So first of all, we can see that for DBS, this is based on last year 2019 annual report. They actually make an income, okay, of 14.5 billion. Okay, 14.5 billion. All right, that is a lot of money. And we can see that DBS is not just in Singapore. They're actually in 18 markets globally. Okay, but of course they focus on 6 priority market, which is mainland China, Taiwan, Hong Kong, Singapore, Indonesia, as well as India. Okay, so these 6 are their main priority, but in total, DBS is in 18 different markets. Okay, 18 different markets. So just to give you a more breakdown, a clearer breakdown, 63% of the income comes from Singapore. So and 27% comes from Greater China, okay, which is very near to Hong Kong, and 10% is others. All right, so we can see that majority of them actually still come from Singapore, but quite a huge percentage. I would say that 27% actually comes from China, which is a huge market. Okay, which is a huge market, and later we actually discuss more. So these are the 3 key profits driver for DBS. All right, so the first one is of course Hong Kong and the rest of Greater China earnings have tripled over the decade. So 10 years. So in 10 years, they actually tripled the earnings, okay, in Hong Kong as well as the rest of Greater China. So that again is a huge market, and I think they still have a lot of room to actually grow and expand. All right. And the second one is digitalization. Okay, so I'm sure you guys realize that right now a lot of banks are moving into 5G, not say 5G lah, but things like fintech, and using smart technology. So the use of digitalization actually boosted income, okay, and reduced cost. Okay, boosted income and reduced cost. So one of the key example that I actually read up is that in India and Indonesia, so they can actually open a DBS account just over the phone. All right, so in India and Indonesia, they can actually open a DBS account over the phone. They don't even need to go to the bank. All right, just over the phone, download the app, they can open the account. All right, so that actually reduces a lot of the cost because you don't really need a physical office. All you need is basically just a good branding, and you need the app to be able to support, the onboarding of the account. So digitalization, I would say that it is something that is growing over the next 5, 10, 20 years. This is definitely going to continue to grow. I would say a double-digit growth in terms of this area. So the banks are spending a lot of money on digitalization. So I think that will be one area we want to focus on. And moving on to the last one is increased high returns business. Okay, increased in the high returns business. So just to share with you guys that actually we know that the bank make money from loans. All right, but in terms of the profit margin that the bank get from loans is not amazing. Okay, it is not amazing results. So as you can see over here, they state that the high returns business actually comes from wealth management as well as cash management. So what do I mean by this? Basically, today when you go to the bank, you see a group of very, very handsome looking and pretty looking agent or I would say staff, so we call them a RM or banker. So when you actually go there, what do? They actually will ask you whether do you want to put your money into could be a 5-year savings plan, a 10-year savings plan, or do you want to buy insurance? So these are what we call a wealth management product. And right now, banks are also selling a lot of unit trust, investment product. So those are the high margin product that the banks actually can sell. So as you can see, the banks are putting more effort into this kind of high returns business. So that's why you see and more actually there's a lot of bankers that even over the weekends you see the bankers are working hard, doing their roadshow, doing their standing outside the branch, just to get more customer. So that is something that the bank actually place a lot of emphasis on to actually boost sales, right? So these are the 3 key profits driver that is driving DBS. All right. So again, I just use DBS as an example. So does this mean the same for OCBC? Does it mean the same for UOB? I would say pretty much they are the same. But of course, different banks would have different strategy, different thing that they actually focus on as well. Like for example, for OCBC, they actually bought over China bank. So that's why you have this OCBC Wing Hang. Or is it Hong Kong? Yeah, so that is basically what OCBC is doing. They are probably moving towards the China market as well, expanding into the China market. Right, so coming on to the next one. Okay, coming on to the next one. Let me just... Okay, so step number 1 is, of course, looking at the business fundamental. Step number 2 is valuation. Step number two is valuation. So is it the right price to enter into any of these bank? So we have 3 different criteria to look at. Okay, one of them is P ratio, price to book ratio, and of course we have dividend yield. So I'm going to start with the first one. Okay, price to earning. You can see that over the board, what is a good amount? Price earning, the lower the better, the smaller the better. So in fact, anything below 12 is amazing. So we can see that all 3 Singapore banks fulfilled the criteria. That means they are undervalued right now. And of course, we have JP Morgan, which is the lowest, 8.43 for P ratio. So you can see that the US bank have actually fallen a lot more than the local bank. So that is for P ratio. So just by looking at the P ratio, I would say that the current local banks, they are all undervalued. But let's move on to price to book as well. Okay, so price to book, okay, the thing that we are looking at is the number must be smaller than 0.8, smaller than 0.8. So right now, based on price to book, all 4 banks are overvalued. Okay, all 4 banks are overvalued. The closest is OCBC at 0.83. So once OCBC falls below 0.8, it would also pass the price to book criteria. All right, and moving on to the last one, and something that I'm excited about is dividend yield. Okay, unfortunately, I don't know why I can't show the dividend yield. Okay, let me just clear my slides. Okay, delete. Okay, now I'm pretty sure you all can see my... Okay, let me just remove the poll first. Okay, so over here you can see that based on dividend yield, our 3 local banks are performing very well. Okay, above 5%. Anything that's above 5%, it is a pass. Anything that is below 5%, it is a fail. All right. So we can see that the highest so far is DBS. The highest so far is DBS. So if you are collecting the banks for dividend, probably DBS will be the best choice for you. All right. But if you are looking at something that is below book value, the lowest, then maybe you can wait for a little while. OCBC will be the best choice. Okay, but again, I just want to share for valuation, the company doesn't have to fulfill all 3. Okay, the company doesn't have to fulfill all 3 as long as they fulfill any of the 3. That means all of these 3, as long as one of them fulfill, you can actually go in. So like for the first one, P ratio, everything passed. So in fact, just based on P ratio, even if the dividend yield fail, you are still okay to enter based on price to earning. But for example, today, if I buy the bank for dividend yield, then of course I will focus more on the dividend yield. Yeah, so right now, you know, DBS is giving me the best, which is 6.45. So if given a choice, if I want to buy the bank for dividend yield, I will probably choose DBS. All right. So once again, the share price, I put it there. Okay, but in fact, the share price is just something relative. So we don't look at share price. Okay, so for people who are totally new to investing, you know, people will be like, wow, OCBC is only $8.81. I think it is cheap. And then you look at UOB. UOB is $19.90. It is expensive. Okay, it is not true. So we do not look at the share price like this. All right, we do not look at the share price like this. So we can take a look at this JP Morgan. Does it mean that JP Morgan $90 US dollar is the most expensive? Probably not also. Because why? When the JP Morgan recovered, it could go up to $300. It could go up to $400. So when $90 go up to $400, that's 4 times. But that doesn't mean that your OCBC $8 will go up to $40. It might only go up to $20. So if you look at that, in terms of percentage, JP Morgan will be a better deal because it can actually make me more money. All right. So once again, don't look at the share price. The share price is relative. So we look at dividend yield, we look at price to book, we look at price earnings. So that is for valuation. And now that is step number 2. Okay, that's step number 2. So coming on to the last part, which is step number 3, looking at the trend of the local bank. So the first one I just want to show you is DBS. So first thing we want to focus on over here is look at the lines, okay, the red line as well as the green line. So this line is what we call the EMA line, exponential moving average. So when you see the EMA line pointing downwards, it is telling you that the market is still going down. Okay, when you see both pointing downwards, it is telling you that the stock is going down. So that's for DBS. So now if you look at OCBC, same thing. We can see that right now, okay, the red line, the extreme end, as well as the green line, both lines are still pointing downwards. So once again, based on the trend, it's telling you that OCBC is still on a downtrend. It's still on a bear market. All right, so that's for OCBC. Coming back to the UOB, exactly the same. So okay, both lines are pointing downwards. So it is a downtrend. It is a downtrend. All right. So I know some of you start to have some question. So Borwen, just now you say undervalued, then right now you say downtrend. So should I buy or should I not buy? So you have to stay all the way until the end of this bonus session. I'll share with you exactly what to do right now. All right. So please stay on. Don't go yet. All right. We have not finished. So if you look at the last one, JP Morgan, same thing. You can see it's exactly the same. The green line is pointing downwards. The red line is pointing downwards. It's just telling you that the trend right now, it is still going down. Okay, it is still going down. So both lines are pointing downwards. So the next key question over here is, will the bank still drop? Or how much further will the bank drop? So I just want to share with you based on JP Morgan. Okay, JP Morgan back in year 2008, during the last financial crisis, which happened to be also our banking crisis. So in 2008, JP Morgan share price fall by 71.58%. Okay, I hope you guys can see. It's a little bit small, but the banks actually dropped 71% during the last crisis. But that is for JP Morgan. So I know you all will say that, oh, Singapore is better. Singapore Bank is a lot stronger. So let's take a look at DBS. So back in DBS, in 2007, the share price dropped 69% in 2007. Same thing is the banking crisis. So during the banking crisis, the subprime crisis, DBS has fallen 69% from the top to the bottom. So now we look back at even further back, year 2000. Okay, because this is not a banking crisis. Year 2000, it is a dot-com bubble. Okay, which is similar to right now. We are not having a banking crisis. We are having I would say, a health crisis because of the COVID-19. So if during 2000, DBS can also drop 68%. Okay, 68%. So you can see that on average, banks actually, when they drop during a financial crisis, they can drop around 50 to 60%. Okay, this is based on DBS. I think some of you have some questions, so let me just take a look at what you guys actually posted. Kelvin Sito, DBS should be the best. Yes, I totally agree. Based on these three, DBS is so far the most solid. But again, I just want to share that I think all three banks are amazing companies. All right, but if given a choice, if you only have enough money to buy one bank, I would actually choose DBS. I would choose DBS. Yeah. If there's any DBS, if the CEO of DBS is here, please give me some commission. Okay, I'm just kidding. All right, so just to summarize, okay, I would say that Singapore banks are fundamentally strong. All three Singapore banks are undervalued based on dividend yield. Okay, like I said today, I'm actually happy to own all three banks because they are giving me a dividend yield of more than 5%. Okay, can you imagine right now all your money sitting inside the bank account and the bank is giving you 0.05%? Just by taking your money out and investing in the bank and not putting your money in the bank, you are getting a lot more. Okay, okay. Instead of putting your money inside the bank, why not invest in the bank? Okay, why not invest in the bank that you are putting in and you are getting 5%? So how can this dividend yield be even better? Okay, the dividend yield will increase when the share price drop further. Okay, so if the price of all three banks continue to go down, the dividend yield for all three banks could increase even more. Okay, even up to 7% or even 8%. I hope it doesn't go up to 10% because that will mean that the price have dropped significantly. For people who are currently invested in it, it will be very, very painful for them. Okay, they will probably be unable to sleep well, right? So I would say that, but it is possible for the banks to go up to about 7 or even 8% dividend yield. So the last part, which is talking about the trend, is although the price right now is good to enter, okay, but I just want to share that the current trend, it is still heading downwards. All right. So what I would encourage you guys to do is to average out your entry, which means that you could actually, let's say you have $10,000, you can actually start to allocate $3,000. You can start to buy now. Then as it goes down further, you put in another 3,000. Then if it goes down even further, then you put in another 2,000. Okay, so you can basically just spread out lah. But make sure that every time you enter, the dividend yield is above 5%. So right now you might be collecting 5%. Then maybe 1 month later you might be collecting 5.5%. 3 months later you might be collecting 6%. So on average, make sure that you are all going in at above 5%. So it must be undervalued. It must be undervalued. Okay, but can I catch the bottom? The answer is probably not, unless you are really, really good at looking at the market. But other than that, I would advise everybody to start investing right now, put some money in, so that when it drops further, you know that, hey, actually it drops further. All right. So the worst thing that can happen is people just wait and wait and wait and wait. And even when it is 7%, 8%, they don't dare to go in, because it's like you have never invested before and suddenly you want to put all your money inside. You know, you will be like, it is not easy for you to take the first step. So for people who have not invested before, what I would suggest is for you to put some money in first. You know, as it drops further, then you put in a little bit more, you know, slowly, bit by bit. All right, just remember, whatever money you put in right now, they are going to give you 5%. As long as you just keep holding it, the price will recover. All right, the price will recover, you know, and while waiting, you get to collect the 5% dividend. So it's like, why not? All right, so like I said, banks, amazing deal right now. This happen every 10 years. So that if you miss this chance, okay, I'll be doing this Zoom video in 2030. So 2030, invite your friends to come and watch. All right, during the next crisis. If you do not want to miss this, if you do not want to wait another 10 more years, do encourage your friend to actually start investing right now. Invest in the most solid one. Never go wrong on the bank, local bank, DBS, OCBC, UOB. All right. And right now is a good opportunity to enter, but don't go all in. Don't show hand yet. Okay. All right. Only I can show hand. Yeah, I can show hand on this video, but don't show hand on the stock market. All right. Let me just take a look at some of your other questions. Yeah, so the UI admin mentioned, yeah, JP Morgan actually dropped 71.58%. So what is a good amount to enter for each bank? That is for Felicia. So I think this is a good question, but it really depends on how much money you have lah. Okay, depends on how much money you have. Okay, but again, I always encourage people to diversify. So allocate a 10 to 20% of your portfolio, you know, for banks. Yeah, but again, it's good to diversify into different sector as well. So put some into banks, put some into REITs, okay, put some into it can even be, you know, the basic things that we need every single day. Johnson and Johnson. If you're looking at US, you can even invest in Johnson and Johnson, you know, Procter and Gamble, you know, your Head and Shoulder, everything that you use every single day, or even McDonald's. All right, so just diversify. Xinghui, would you put the dividend back into the stock again? It depends. It depends. If you need the dividends for income, for survival, then of course you take the money out. But if let's say you have no use for the dividend, and assuming that the valuation is still undervalued, then you can actually use the dividend and actually reinvest again to buy more. That way you actually compound, so your portfolio actually grow even faster. So if you have no need for the money and the stock is still undervalued, so go ahead and reinvest your dividend. You may use your CPF stock investment to buy share. Yes, fantastic. From Key. For people who have CPF, you can actually use your CPF to invest in the stock as well. All right, you can use your CPF to invest in stocks. If I am not wrong, you can use up to 35%. So the first 20,000 of your ordinary account, you're not able to invest. Okay, anything above 20,000, you can only allocate 35% into stocks. Okay, you can only allocate 35% into stocks. But one of the hack that I found out is you can actually invest in the STI ETF. Okay, you can actually invest in the STI ETF, and how many percent? 100%. So for people who don't want to even do research, you just want to buy into something safe, you can look into the STI ETF, which actually is a basket of funds that represents the 30 largest company in Singapore. All right, and you can use 100% on top of the 20,000 of your CPF. Anything above 20,000, you can use everything. You can just put it and invest. All right. Will the bank still do buyback after MAS advice today? I am not too sure. I am really not too sure. Okay. So 2030, yeah. You too rich can show hand. Yep, show hand. Okay. Can we have a REIT analysis to? Okay, I'll look into it. I'll look into it. In fact, one of the best guy to talk about REIT is Kelvin Sito. Yeah, Kelvin Sito over here. Yeah, he's a hidden guru. So one of the best, I would say one of the best fundamental guy that I know is actually in here as well, Kelvin Sito. So if we have the opportunity, can we invite Kelvin Sito to also help us to do a special series? If it's okay, maybe Kelvin Sito can put okay, so we can all benefit from it as well. All right. All right, so let me just move on. So what happened is that I have finished my analysis for the banking sector. I hope it is useful for you. If it is useful, please comment in the chat group useful. All right, so that if we find it useful, we will create more content similar to this to share with you guys. Yeah, and I'm still waiting for Kelvin Sito if he's still here to benefit everyone. Okay, and so for people who want to find out more, okay, about Singapore stock market, okay, and of course to watch out for our next upcoming bonus session, okay. Once again, join our free Telegram, okay, which is the same for those of you who actually came from there, okay. But do share this Telegram with your friends as well, so that whenever we have additional bonus session, they will be able to benefit as well. And if you want to learn how to analyze other industries and how to profit during a bear market from this powerful video, I actually done up this video, which I have also shared inside the Telegram. For those of you who have not watched it, do go and watch it. It's bit.ly/earn-from-the-bear. Okay, where I share about the US market, how do you benefit? When everything is dropping, how do you still make money? All right, so that is actually shared in the video. So for those who have not watched it, do go and watch it. Once again, remember to like our Ultimate Investing Facebook group for more US stock updates. So our main Facebook group, we actually share more about US stock, because in Ultimate Investing, we actually do mainly US stock. I would say 90%, 95% US stock, right? Because we are using options. But again, whatever we learn, we can also apply into the Singapore stock market, which I think right now there's huge opportunity, okay, to invest in the Singapore stock market. And if you like to have more bonuses video like today, okay, I know you guys want more bonus video, definitely. All right, so please help us to leave a review. Okay, just Google Ultimate Investing on Google and leave a review for us. Okay, again, we are actually motivated when we see a lot of review. So we are normal human. When we see review, we are happy. We create more content. We create a read for you guys. So do help us. If you like whatever you shared, you have listened today, please Google Ultimate Investing and leave a review for us. And once again, invite your friends to join our Telegram group, which is t.me/ultimateinvestorsg. So you can just take a quick photo. Later on, you can do the review, no issue. So I just want to move on to the last one, which is Q&A. All right. So anybody have any burning question? I think this is the time for you all to ask. Amanda, will you share this record in Telegram? Yes. For those of you who are inside the Telegram, don't worry. I will record this particular session and I will upload onto the Telegram group so you guys can watch it again and again and again and again and again. Right. So from JJ have a question. What technical analysis indicator do you use to determine your entry point? So one of the entry point I use is actually just the moving average. Just now you can see that I have the green arrow, green line, and the red line. So when the green line crosses the red line, okay, that means this is what we call a golden cross. That is my entry point. Okay, that is my entry point. So I use moving average quite a lot to determine my entry point. So that is for JJ. Can do the same analysis on other banks? Yes. You can use the same analysis for any banks. Like I said, I use it for Singapore banks. I use it for US bank. You can also use it for Hong Kong bank. You can use it for Malaysia bank. Yeah. But I've done some research on the Malaysia bank. I can tell you that you will appreciate Singapore bank a lot. Okay, you will appreciate Singapore bank a lot because Malaysia bank actually they leverage quite significantly. Okay, they actually leverage a lot more than Singapore. Where to plot EMA 50 and EMA 200? You can use, personally I use this software called TradingView. So TradingView under indicators, you will be able to set all that. Okay, but again, very simple. My best friend in the 21st century is Google. So you can just type in how do I plot EMA 50 and 200. Everything is on Google. Not me. Right. So any one of you have any question, do post it into the chat group right now. Okay. Especially for those who are inside our Telegram. You know, I know that we have been suppressing you guys by not allowing you guys to actually comment in the Telegram group. So if you have any questions, any burning question, doesn't have to be related to banks. Any other question, you can also just post it right now. Let me just check the time. The time now is about 9:23. I'll be here until about until about 9:35. So we just take about 12 minutes for Q&A. Right. So for those who have questions, just stay behind. Are you worried about DBS writing off bad debts again? I think for every single banks, I have done a check. All three banks, their bad debts is about 1.5%. Okay, right now all three banks, their so-called non-performing loans are at about 1.5%, which is pretty healthy. Okay, which is pretty healthy. And I think ever since the last crisis, which is the banking crisis, the banks actually have done a lot more stringent check, I would say. Okay, the banks have done a lot more stringent check. So it's a lot healthier compared to the last crisis. I'm a newbie investor and want to start investing in our local banks. Which is the best platform or brokerage to do so? So this is for Felicia. Like I said, personally, if you ask me, all the brokerage are similar. If you ask me, all brokerage are similar. The only difference is the user friendliness of each platform. So usually for me, I will look for a friend who is working inside the brokerage house. Then I will open an account there. Because why? If I have any questions, I will just look for my friend. If I want to buy any shares, I'll look for my friend. So that would be the best case scenario. All right, so that's for Felicia. So if you need any broker, I do have a tie-up with a UOB banker, UOB broker from UOB Kay Hian. So if you need his contact, I can actually share with you. All right. Yeah, it's for Felicia. JJ, totally unrelated. Where do you think Luckin Coffee is headed towards? Honestly, I really don't know, because when it comes to fraud, anything can happen. All right, anything can happen. Of course, for me, I believe that, you know, as much as the fraud happen, the stores are real. That means you can actually see that they are really growing massively in China for Luckin Coffee. You know, so to what extent is the fraud? I think that is important. Okay, to what extent did they actually fraud? Is it like a 20% additional revenue that they actually created, or is it like 100% revenue increase? So that is a huge impact, you know. But again, for Luckin Coffee, their report is actually released by this company called Muddy Water. Okay, Muddy Water. So again, this company, they like to release so-called bad news about company, and then they short them. So usually, yeah, I don't like this company, Muddy Water. So I find that Luckin Coffee still got hope lah. But right now, if you ask me, there's so many opportunity in the market, so I will not actually go into Luckin Coffee. Yeah. So that's for me. There's a lot of opportunity out there in the market. So why go for something that we are unsure of? So that's for JJ. And from Laptop, what do you think about shorting the banks at current share price still? That depends on what instrument you use to short. Okay, that depends on what instrument you use to short. Personally, for me, for the US market, I use option to short. So option is a lot safer because of limited loss. But in local context, if you are going to short the Singapore bank, probably you have to look into CFD. So personally, for me, I will not advise people to actually short the local market. Okay, I do not advise people to short the local market, especially using CFD. Patrick, DBS or OCBC has better growth in the next 5 years? Wow. If I have the answer, I will tell you, but I really don't know. In my opinion, both are good. So to be safe, I think go for both DBS and OCBC. Okay. Just buy both. So it is actually safe for you. All right. Okay, very important. Okay, once again, I think before I forget, thanks Key for the reminder. Again today, okay, whatever I share with you is my personal understanding and my personal opinion, okay, of the stock market. Once again, today you are all responsible investor. Okay, once again, you guys are responsible investors. So I just want to put a disclaimer that if you buy the stock and you make money, okay, it is not my credit. I don't have to take any credit if you make money. But very important that if you buy and then temporarily you lose money, then you have to know what you are doing. Okay, I'm not saying that I am not going to be responsible, but okay, this is very important disclaimer that today, whatever trade we do, we have to understand that our risk profile is different, individual. So for me, I'm willing to buy and hold for 5 years, 10 years. I'm okay. Some of you buy, the stock market drop, cannot take it, cannot sleep, then you have to sell it away at a loss, So it depends on your own personal risk appetite. So just a disclaimer. Thanks, Key, for the reminder. Yeah, so probably after this, I'll edit a video and put a disclaimer at the front. Yeah, interest applies for CFD, options doesn't. So yeah, personally for me, I use option more. I don't do CFD. Beside loans interest, are there any revenue stream which forms a significant portion? Yes. Like I said, one of their higher ticket item is actually their wealth product. Okay, their wealth product, and that includes insurance. So that is something that they are actually spending more and more emphasis on. If I'm not wrong, it forms about 20% of their overall profit, okay, from all these products. Yeah, for OCBC, Great Eastern is significant income for them. Yep. So OCBC owns Great Eastern, and Great Eastern yeah, has proved to be really profitable. Has proved to be profitable. Right, so time now is 9:35. Yeah, so far I still see 66 participants. So, but I only see a few names appearing. So for the rest of you guys, where do you find the loan to deposit ratio statistic? I actually took from the annual report. Okay, I actually took from the annual report. So I tried to find them, but it seems like, yeah, not easy to find. Yeah, but in the annual report for individual banks, you will be able to find them individually. So that's for VL. So yeah, do read up on the annual report. If you can't sleep for the next 30 days, just take any of the annual report and read, and definitely you will sleep well. Right, anyone have any other questions? Yeah, once again, remember to share with your friend our Telegram, invite more friends to come and join our Telegram and our Facebook group as well. What happened to your stocks if the banks merge? Okay, so actually it's the same thing. So for example, DBS and OCBC merge. So maybe they will come up with another ticker symbol called DBS OCBC. So now you will actually own share of this DBS OCBC. Right. So that's exactly how it works lah. But of course, in terms of the value, there might be some changes. There might be some slight changes, but pretty much your stock will still be there. It will be under another name, which is under the merge name. So don't worry about merger. In fact, usually most of the time during merger, the share price actually will go up. Okay, most of the time if there's a merger, the share price actually go up. Have you compared the banks all over the world? Answer is no. Because I only stay in Singapore, so I'm familiar with Singapore. Yeah, but I do look at US stock as well, US bank stock as well. So these are the two markets that I personally focus more on, US as well as Singapore. So that's for Johnny. Good to see you, Johnny. Right. Anyone have any other questions? Any burning questions? What is the price of sets moving? What is the price of SATS moving up? Why is the price of SATS moving up? Like I said, I think if you had followed the US market, right, surprisingly, not say surprisingly, but the Singapore market actually follow the US market. So when the US market goes up, so for example, today, let's use today as an example. So tonight, 9:30, when the US market open, in fact, just open. So if let's say tonight, US market crash, drop 10%, okay? Tomorrow, what happened to the Singapore price, stock market price, is everything will drop like crazy. All right, so same thing for the last 1 week, for the last, I think 1 or 2 weeks, the US market actually has shot up quite a bit. Okay, the US market has shot up quite a bit. So as a result of that, we can see that the Singapore market actually follow as well. So quite a number of Singapore stock also went up. Okay. So where do you think the US, this is the poll that you guys actually have mentioned, US market will be heading for tonight. Wow, 52% say down. Fantastic. Yeah. I also hope that it will go down, but let's see how it goes. Okay, V-shaped recovery seem less likely. Also, with interest rate at 0 for a long time, bank dividends payout not sustainable in the near term. Yes, definitely. I think a V-shaped recovery is unlikely. Again, we are only about 2 months in the recession. So average recession take about 11 months. So we still have a long way to go. We still have a long way to go. So like I said, it doesn't mean that the market definitely will go down. So again, we try not to predict the market. We try not to predict where the market will move. So if you find that the dividend or whatever of the bank's dividend are comfortable, just go in right now. Just go in with a bit of money. And if it goes down further, then you go in a bit more. So you slowly go in. Yeah. Then moving on to the next part, with interest rate at 0 for a long time, bank dividends payout not sustainable in the near term. I would say that previously we already have faced low interest rate. I think for the last 10 years, the interest rate has been really low. And yet we can see that the banks are still able to profit. Yeah. Of course, the banks actually make more in a high interest rate environment. But having said that, banks, you know, they will not do a losing business lah. Even when the interest rate is 0, they will still charge you interest for mortgage. Okay, they will still charge you. They will still make money from your mortgage. They will still charge you interest from your mortgage. But of course, in terms of the margin that they are able to earn during a low interest rate, they are making lesser. That doesn't mean that they don't make money. So they still have profit to actually give out lah. So that one I'm pretty sure. Now up, Victor. Yeah, short term is going up. Team Bear, yeah, Team Bear. All right. I think we are all done. We are all done. Okay. So I really appreciate the rest of you guys, 60 over people still right now tuning in to our special session. So once again, do follow us on Telegram. We keep you updated on the latest news in the Singapore as well as the US market, you know, and we look forward to creating more content to share with you guys through YouTube, through Telegram, and of course through Zoom channel like this. So we hope you guys actually like what you hear today. Once again, thanks a lot for your time. I hope you guys stay safe, stay healthy, and I think most importantly, for the next 28 days to go, learn something. You know, take this opportunity to learn something, learn anything. Okay, it can be about investment as well. Okay, learn anything and make full use of your 28 days, because I can tell you that after these 30 days, things are going to be a lot more challenging. So do be prepared during this 30 days CB period. Okay, yeah, this CB period is really a period for us to prepare ourselves, right? So be prepared. Yes, I will definitely create more content for you guys. Okay, I hear you, Xinghui. Do this as a weekly thing. Wow, this one a bit challenging, but I'll try to. All right, and yeah, that's all for me tonight. And yeah, have a good rest. I'll see you guys in the next video. All right, bye guys. Good night, everyone. It's time for me to look at the stock market. Okay, bye guys.